Well, the crude oil price is at a 32-month highs. It's just making life difficult for all consuming countries across the world, but more so for India because 85% of our requirement for crude is imported. It has gone quite huge from where we were in 2014 at 77%. And there is a Wood Mackenzie report suggesting that in next 5 to 8 years, we might be importing nearly 90 to 95% of our requirement as well. So this is a pain that we will continue to see. Well, the global crude oil prices, first of all, on why are they high? Well, they are high because we have seen demand recovery come back quite strongly. The supply discipline that OPEC has been holding since last year is what is continuing now as well. And even as OPEC and allies were planning to increase production by 400,000 barrels per day from the month of August, that would have accounted to 2 million barrels per day between August and December, is right now at a pause because UAE does not agree to those numbers. UAE says that the number is fine, but they need their base being revised so that they are able to produce higher, and that is what they're asking for. So it has been a failed 3 attempts that OPEC and allies did try to come to an agreement, and is the reason you have seen a very strong reaction come into prices. Well, even with the OPEC and allies agreeing, and even if this would have gone through, markets were in any case factoring higher prices of around 75 to 80 to $85 per barrel within this quarter as well. This is a quarter that is perhaps looking at a deficit in case of supplies and a very strong demand improvement. In the month of June itself, Goldman Sachs says that 2.5 million barrels per day of a deficit is what the world went through. Well, from higher inventories in the previous year, we have seen a constant decline in that. IEA, OPEC has continued to say that by end of this year, we would be in some sort of a deficit. Inventories in the global markets have continued to decline. They are almost at par at a 5-year average, and that is supportive for crude oil prices. Where does that keep India, where we are looking at an all-time highs in sense of diesel and petrol prices? One, it is the high base price for us since we are importing most of it. And the second is the higher taxes, central and state, which were hiked in the last 1 year as well and haven't been brought off because the government did need revenues and it wasn't get much in the sense of GST and other tax revenues there. So this is what they hiked into, but they haven't gone back into it because even now, even as India comes out of its second wave, the demand recovery is quite uneven, with expectations that we will perhaps reach pre-COVID levels by the time it's November or December. But until then, we may have to live with these higher taxes and higher crude oil prices also. For Indian markets, the concerns are not just with the car owners or transportation or in sense of jet fuel. It actually boils down to various levels because every food component, every article, every commodity has a component of crude oil because of the transportation of it. And then you have delivery guys, you have e-commerce. That cost also seems to have gone up. India, especially when you're sitting at home, everything is being delivered to you, and that transportation cost seems to be adding everywhere there. That's not just it. Well, there would be concerns also with various companies which use crude oil in some sense or the other. So whether it is tire, footwear, lubricants, refining, airlines, all of these costs are going on the higher side. And then all kind of services which are being delivered will have a higher cost here. So directly or indirectly, you are paying for higher commodity and services prices because of the higher fuel prices there. Another important is that when you look at India, our prices are pegged at a 15-day rolling average of the international prices. So where we stand right now at near all-time highs, and India has the highest fuel prices in the neighboring countries, we still haven't factored in the current or today's crude oil prices, which are at a 32-month highs or at around $78 per barrel. This is the price impact that we would see as a rolling component in the next week or 10 days. So we still are preparing ourselves for higher prices here. Remember, petrol was decontrolled in 2010 and diesel in 2014, and since then we have seen quite a bit of a volatility as in line with the international prices. This is a chart that would come in on your screens, which shows you on where the international crude prices were in 2003 and where was the diesel and petrol prices at that point in time. Since then, we've seen a constant increase in international prices, but the Indian prices have been only one way, and that has been on the higher side. Nearly higher price of around $110 in 2012. At that time, the Indian petrol and diesel prices were at 65 and 40 rupees. So at $100, our prices were there. At $78, our prices stand at around 100 rupees a litre for the petrol prices and nearly 92 for the diesel prices, with the expectation that the next 3 months could be looking at even higher prices from here. The government will have to see on where to cut the excise and duties here on a centre and a state level, but that could perhaps come in the next 2 or 3 months, not earlier than that. Government also wants to see on what kind of recovery happens in the Indian markets. Is there going to be a third wave or not? How do the international markets look like? So there are a lot of uncertainties there. Until then, you perhaps are looking at a higher price here. When it comes to the fiscal deficit or the current account deficit, well, in normal circumstances, there would have been a big dent there. But at this point in time, we are looking at demand decline by nearly 26 to 27% is what we've seen in the months of April, May, June. So that has led to lower imports into the market, and is the reason you haven't seen this come into the balance sheet yet. But having said that, as the country recovers from the second wave of COVID, higher fuel prices absolutely do not help. It impacts every level in the sense of households and companies as well. So yes, it is going to be a difficult time, and from where we stand with the kind of statements that are coming in, whether it is from IHS Markit, Vitol, Bank of America, Goldman Sachs, they have been talking about a possibility of $100 per barrel of crude prices, and that tells you that it's not going to be a sweet spot for India, at least for the next 3 or 4 months, and we could be dealing with higher crude oil prices. There are various reports also saying that for a longer term also, in the next 12, 18 months or 2 years as well, we perhaps are going to be looking at $75 per barrel of crude prices sustaining. So that tells you that this perhaps could last longer than we are prepared.